The family home is home sweet home until it's not. Well, let's not make this a battleground in divorce. And the way we're not going to let this happen is through our guest today, Hannah Ohman. Now, let me just tell you, first of all, Hannah is a great realtor. She's in Southern California, and we met because we both belong to something all of you would be very interested in, and it's called the Amicable Divorce Network. So this started in Georgia, then it traveled to a couple other states out west and landed in California. But I know in the last few years, this network has opened up in other states. So after you're done listening to this, please go online because you will benefit. People that belong to this network are Hannah, a realtor who specializes in divorce, me, a paralegal who files, and a mediator. And then you have attorneys, you have divorce coaches, you have co-parenting coaches. So you have so many different people that will support you in your amicable divorce. And it's really great to have a reference like that in every state. So that's how Hannah and I met. And then when we talked, I said, "Oh my gosh, you have so much excellent information to share with the audience. Let's do an episode." And so here she is. Thank you, Hannah.
Yes, thanks for having me. Looking forward to it.
Okay, this is great. So the very first question. All right. Well, you're an attorney, and I don't know how much that factors into the real estate business. You can add that, but you are a realtor and you're a divorce specialist. So how do these three things come together?
Yes, so I left my career as a litigation attorney to pursue real estate, and it doesn't mean that I'm not using my law degree and my law knowledge. I have a deeper understanding of contracts, the legal process, divorce itself, being divorced myself. So all of that, the legal expertise and the real estate expertise mesh really well together, specifically when it comes to helping divorcing homeowners navigate the process through getting divorced.
What is the difference? This is huge, and this is where you are a specialist in divorce. What's the difference between helping sell a home for a divorcing couple than others?
Yes. So anyone who has sold a home knows that it's already a stressful process. There's no question about that. But of course, when there's a divorce on top of it, the stress is amplified times 1,000. So there's emotional roadblocks to get through, there's communication roadblocks. Both people might be living in the home, or one might be living outside of the home. There's a legal process to follow. You have to follow the settlement or court orders or agreements, working with attorneys and other divorce professionals. So there's just added layers of complexity and added layers of things that can get in the way of a successful home sale, and ultimately means that you walk away with less money if these things are getting in the way of the home sale. So it's a lot more
So,
complicated.
like, give us some for instances.
Yeah. So for instance, there might be a court order or a settlement agreement that the home is going to be listed for X amount. But one spouse might decide suddenly that that's not good enough for them and they want it to be listed for a different amount. And then there's a disagreement between the settlement or the court order, the spouse, the attorneys, the realtors. There's many things that can get in the way. Communication is a big one too. A lot of times the spouses do not want to or cannot directly communicate with each other. So that means the realtor, who is the neutral advocate for the property in this scenario, is having to do that extra legwork to make sure they're communicating with both parties, but separately and in a very neutral, respectful way.
So many things you just brought up. A, sometimes the home isn't sold prior to the divorce being final. And so you referenced there will be specific terms in the settlement agreement about when the house should be listed. I've never seen an amount put in there, but doesn't mean it's not. Uh, so there's that. And in my understanding of settlement agreements, since I do write them, but I don't litigate, obviously, I'm not an attorney. If both parties are not mutually in agreement to change the settlement terms, don't the terms preside then in the settlement agreement? And if and then if they do, how do they get changed legally?
Hmm. A lot of it, it's going back to working with your attorneys. And you're right, it's not, very common for a number to be in the agreement. Um, but yeah, it really comes down to a disagreement between the parties. And if the parties can't agree between each other and using the realtor, as an intermediary, then most likely they end up going back to their attorneys, and that means more legal fees.
Okay, and that means less money for your portion of the house, which is something everybody has to keep in mind. When we were talking before, just getting to know one another, you said something that you have for divorcing couples that I'd never heard of and I loved more than anything. And you kind of just brought it up now, addressing communication. So, if you can communicate, you can do anything. But when people are divorcing, communication is not at its best. So, how do you handle communication when you're dealing with divorcing couples?
Yeah, so what I do is all together as a group, we come up with a communication plan for how communication will work during the process, if they can be communicated with together or separately through attorneys, just setting all those expectations up front, but also what will happen if the parties disagree on, say, a repair or whether to accept an offer. If the parties don't agree and they won't listen to the realtor's guidance, then there, should be an escalation plan so that if you run into that issue during escrow in particular, where you're having to meet all of these timelines, then you know exactly what to do so you can do it immediately and try not to waste time or money.
I love that. I really love that. I actually thought about maybe introducing that in my mediations because it was such a unique thing that you brought up. And I said that this is at the heart of everything is the ability to communicate and not using ghosting people, ghosting the other spouse as a technique to get back at them for the reason for the divorce. And that always pops up, that
Yes,
temptation. And do
it
you
does.
find that because you're an attorney, if you're working with represented parties, does it make it a little easier for you to be the realtor and navigate their attorneys as well?
It does. Attorneys speak a very specific language, and that is a language that I know and was trained in as well. So, and I know how the legal processes work. I find that the attorneys respect me a little bit more as well, which is important. And so do the
Yeah.
clients. And the clients, for that reason, are less likely to go back to their attorney for specific issues, which is something I hear from divorce attorneys that frustrates them, is that their clients are constantly going back to them instead of to the realtor for real estate issues. And it's not fun for the attorney and it's not fun for the client's bottom line with their legal fees.
Interesting.
Yeah.
Interesting. Okay. Um, People approach the sale of their home with unrealistic expectations sometimes, or very different expectations. And Hannah, it starts with valuing the property. So disclosures are a part of the divorce process. You put down all your assets and debts, and you bring support documentation to verify the value of your assets and debts. There is support documentation that goes along with real estate. The current mortgage is one thing. That's easy. You get that every month, so you know where your mortgage is at. Um, but the value of the house, let's talk about that because people go to those online services. And then they go to
Exactly.
you and tell you what the house should be put on the market for, don't they?
Exactly. I find that people go off of the online estimates, from Zillow or Redfin, Realtor.com, and they rely on them a little too heavily. If your home is unique in any sort of way, even if it's not unique, this estimate or those online estimates can be off. And because they're going off of an algorithm, not off of what your home is. And so, what I recommend to divorcing clients is to get a valuation from a realtor earlier in the process. So, you're negotiating the right number. Because if it's off, and
Mm,
I've seen them be off
yeah.
$100,000 from an online estimate, then you're negotiating the wrong number and then it messes up all of the rest of the negotiations around the assets.
It's really important. That is really, really important. I'm glad you brought that up because what I have seen in a mediation is that each person has their own person that they've researched either through friends or they have a realtor who's a friend from a networking group, or there's a neighbor. Well, the neighbor, of course, knows the neighborhood, so that would be valuable. But that becomes an issue sometimes is which realtor do we use? So how should people really approach the information they're getting from the realtor? Like, oh, well, this realtor says the house is worth much more than this other realtor. How do you navigate that or interpret that?
Yes. So when that happens, sometimes you can bring in a third realtor. Often I found that each party wants to bring in their own realtor to get a valuation. Sometimes those valuations match up, sometimes they don't. They should match up, but if they don't, then you can get a more formal estimate with an appraisal.
Mm,
And so every once in a while, I refer my clients to an appraiser who does divorce appraisals. And an appraisal will happen if there is a refinance, but there's not always a refinance. An appraisal is just a more formal estimate of the home, is what lenders use in order to protect themselves. So if there's a disagreement from the valuations you're getting from realtors, then you can bring in an appraiser. It's just a few $100s. So that's something you want to consider. Everyone is trying to spend less money in divorce. So,
I know, but since the house is probably one of the most significant assets, if it's not underwater, which is a whole different issue. And we can talk about that in a second too. Don't let me forget.
yeah.
Um, but yeah, I like that because now we're just going to numbers. We have to push the emotion out of the way and why you feel connected to one realtor as opposed to another. And because there is a checklist. I mean, the appraisers are pretty much committed to a narrow lane in which they can operate, so to speak.
Right. Yes,
Yeah.
they are. They're very narrow. They look at a more narrow focus than a realtor would because an appraiser is going off of sold homes, but we all know that the market can change pretty quickly, and a home that sold 3 months ago that the appraiser is using, which the realtor also takes into account when they're running their valuation, but the realtor is also more likely to take into account pending sales and active sales because if your home is going on the market, you want to be competitive with those active sales. And those active sales can actually tell you a lot about the value of your home because if the
Hmm.
home is sitting on the market, that means that it's not worth the price that it's listed for. So we want to look at how long these active homes have been on the market, how long the pending homes were on the market before going into escrow to really see the value of the home. And that's something an appraiser doesn't take into account.
But something an appraiser does take into account that a realtor really wouldn't know are the heating system, the roof, the electrical system. There's all these other things that just from owning several homes myself and selling them, I realized that, once a good conversation takes place and everybody's on board with, we think this would be a good list price, then you bring the appraiser in and like, oh, heck, I had no idea, the realtor would say, that these internal things are going on that are very costly.
Yeah, that's a good point, actually. Something I do to avoid that is actually recommend a pre-listing inspection on a home.
Oh,
And even before a buyout, no matter what you're doing with the
oh,
home, I refer my clients to an inspector because, like you said, it changes the value of the home a lot if the HVAC is out, if there's a roof problem, foundation issue. And as realtors, that's also not our lane. Um, to say, oh, that roof looks not great,
right.
we need to get professionals in there to inspect it. So that I recommend that in order to get a true value of the home, because if there is a major issue that comes up in the inspection, that has to be accounted for in the valuation, whether or not it's a buyout or if you're going to list the property.
Excellent. No, that's really, really good. I said don't let me forget, so I'm going to bring it up now because I'm telling you I will forget.
Yeah.
What if the home is underwater or once you consider the real estate agent's commission, the escrow fees, and whatever other taxes or pending fees there are, there may be no money to divide.
Hmm.
So what should people do? They're getting divorced. They can't continue to live together. Somebody has to move out. And I guess the discussion would have to be for the future.
Right. Yeah. And that's something I help with in that I connect my clients with other divorce professionals who can help figure that part out,
Mm,
including a lender. I mean, if you end up having to sell the home and it's underwater, then you would do what's called a short sale and basically negotiate with the bank how much money you're going to pay them in order to pay off that mortgage. If you can't get the same amount of money, you might have to make up the difference. So it does make it much more complicated if there is a short sale. And I know there are creative ways to figure out how to keep someone in the house um, until the value increases, and then you don't have to pay in order to sell it. But it causes issues in that.
okay, that's good
Yeah.
to hear. That
Yeah.
workaround is really good to hear because once in a while that just does happen.
Mhm.
People don't anticipate a divorce and they start refinancing, taking HELOCs out, and all of a sudden now the divorce comes up and we have more loans to pay than the value of the house. And so, oh no, now what do we do?
Mhm.
So, yeah.
Yeah. That's
Let,
why it's important too to get when you get a realtor in, they'll give you what's called a net sheet if you do sell. So that'll take the estimated value of the home, the mortgage payoff if you can let your realtor know any liens against the home, and then it will also tell you estimated title fees, escrow fees, and realtor commissions that would be applied to the sale. So then it'll give you a net proceed amount that you can work off of if you're going to sell the home. So then you know all of the costs that are involved in selling a home.
okay. All right.
Yeah.
That sounds great.
Mhm.
One of the other things that come up are what each spouse, even though they listen to realtors, they may perceive their home to be more valuable than the realtor says because, well, look how unique, you used this word before and I loved it. Look how unique the design of the home is. Okay, well, it may be unique to you, but that may not be unique enough in a positive way, right? And then there are the improvements that people have made. And we know from watching that show, Million Dollar Listing, LA, New York, Miami. I mean, it's a reality show that's been on for a while and it takes place in different cities. But I learned a lot from watching that show because, and I want you to address this, some improvements have value and other improvements are subjective and they don't have the value regardless of the investment you put in. So can you speak to what adds value and what really doesn't?
Absolutely. So you might be putting in X amount of dollars into improving or upgrading the home, but it doesn't mean you would get a dollar for dollar return on that when you sell. So things like a pool, you typically don't get a dollar for dollar return. Things that do,
I
yes,
didn't know
yes,
that, seriously.
yes,
I thought the
but
pool would be a major asset.
a pool can be, or it cannot be, depending on the buyer, because not every buyer wants a pool because of the maintenance costs that come with the pool.
Ah,
Uh-huh.
makes
And so you might
sense.
spend $100,000 putting a pool in, which is a typical amount of money people might spend here in Southern California adding a pool. That doesn't mean it's increasing the value of your home by $100,000. So that's something to
Hmm.
keep in mind. Things that
Okay.
do increase the value can be curb appeal, even changing the front door. Realtor.com says has a good ROI. Kitchen upgrades, bathroom upgrades, some flooring, paint. Those can be good ROI. Um, but it depends on what you're putting in. If you're putting in a very expensive stone in your kitchen, but it's a dark color or something
Hmm.
that's not widely popular, you're not going to get a dollar for dollar return on that, even if you put a lot of money in. Buyers like to see neutral, and if your home has a very specific style, there might be buyers out there that absolutely love that style, but the majority of buyers are looking for something more neutral so they can put their own touch on it.
Which is interesting because when you buy a home and you start improving a home, you're doing it for yourself. And I think that has to count for a lot. If it doesn't get the ROI, the dollar for dollar return on investment, at least you've had the luxury and the time to enjoy this aesthetic appeal that you put in for yourself, but you can't get upset, I guess, that not everybody sees your point of view. Yeah.
Exactly. Yeah. I've seen people put in pink kitchens and they've absolutely loved them and they're very cute and trendy. But if you put that on the market with a pink kitchen, there will be a lot of buyers that are immediately turned away from that.
And the curb appeal part is, well, the door you said, which I agree with, it makes a major difference in curb appeal. And then landscaping. I mean, these are not the most expensive things to do. And when you drive up to a home, that sets the tone for how you're going to walk into the home.
Exactly. If someone drives by the home, they sometimes don't even need to see inside. If they don't like how the outside looks, they're not going to want to see the inside of it.
Unless they truly want a fixer-upper, and this is exactly what this is, and you buy as is. All right,
Mm-hmm.
really good points.
Mm-hmm.
Um, there are some things that are really common misunderstandings, especially for first-time home owners, home buyers. And that would be what's the difference in terms of the net proceeds to divide with a buyout versus a sale? Could you explain that?
Right. So to clarify, you're asking about how the proceeds are divided, depending on
Well,
what you're doing.
what do you have as the proceeds to divide? Because there are things that you put on the ledger that come off the top when you're selling a home that don't exist when you're doing a buyout.
Right. Yeah. If you're doing a buyout, you are avoiding those realtor commissions, which is a big chunk of what you're paying if you sell the home. You will still pay closing costs for refinancing the loan. So that's up to the lender how much they charge. It's typically a few percentage points. But you are avoiding a lot of those extra costs. And typically, then for a buyout, what you would do is value the home and then decide how much the partner or your ex is going to take for a buyout. So then you'll need to afford to pay them out of their share of the home. Sometimes it's 50-50. It depends on your situation, it depends on your state. And then you have to afford to take over the existing mortgage or the refinance. So there's a few items you'll have to pay off or be able to afford to pay if you're doing a buyout.
And one of the things that you have to take into consideration, I would expect, is if there was separate property money prior to the marriage used for the down payment by the person you're buying out.
Right.
And people don't really know that until that's explained to them in the calculation. The other aspect of this that's important that has to really be explained to people, Hannah, and please do this, is if both people are on the mortgage and both spouses are on the title, the spouse that's being bought out, what's the danger in leaving title if you're not able to leave the mortgage because a refinance is not the best thing to do at this time?
Right. So we come across this a lot, right? Because a lot of people have low interest rates on their homes,
Hmm.
and the current interest rates are a lot higher. So if you refinance, you are paying so much more for the same home. And a lot of people don't want to do that. So one of the solutions that people sometimes do is, like you said, just keep both parties on the mortgage, but the person staying in the home wants the other person to come off of the title. But there are many issues you can run into in that situation if you are the one staying on the mortgage and coming off the title. You are at risk if your ex decides or can't make a mortgage payment. They miss a few mortgage payments, your credit is at risk because your name's on that mortgage. Also, if something happens to the person living in the home, the only person on the title, and you're remaining on the mortgage, then you're the one remaining that is responsible for that mortgage and you're still expected to pay it. But because you're not on the title, you don't have control over what happens to that home. So you can easily get yourself in a tricky position if this is the agreement you come to.
Right. You don't own the home anymore on title. So but you do owe if that happens. And I look at things very innocently. Life gets in the way. Something can happen. You can be in a car accident, not able to work, and you don't have disability insurance. And, so that really has to be taken into consideration. And then the other thing is, of course, the person who's being bought out may have the money to a large extent to buy another home, but if they're still on the mortgage, how does that affect the way a lender looks at them?
Yeah, so if you're still on the mortgage, it's still counting towards your debt to income ratio. So it is considered a debt for you. And if you don't meet the debt to income ratio that the lender requires, then you could be denied a loan. Now, there are some lenders who will accept letters or proof that you, even if you're on the mortgage, you are not the one responsible for paying it right now. Your ex has agreed to pay it in full. There are ways the lender can work with you to try to get that off of your debt to income ratio, but it is absolutely something you need to speak to a lender about before you make that decision, whether that's possible in your scenario, so that if you're planning on purchasing after the buyout with that chunk of money, then you know what you're getting yourself into.
And not all lenders respond exactly the same, do they?
Right, right. That's why I like to work with the divorce mortgage specialist in particular,
Hmm.
because they know exactly what to do in divorce scenarios. They know the traps and the pitfalls that people can make when it comes to divorce that other people, just like a real estate agent, other people working in that area, but they don't specialize in divorce, they might not be aware of those issues.
So do you refer people? I think you mentioned, do you know people in different states, even lenders that you can refer that are really dialed into the needs of a divorcing couple?
Yes, I actually refer all the time to someone who is in the Amicable Divorce Network. She's the one that got me into it, and all of my clients have had a great experience with her. compared to when I have referred them to just a general lender, because I do try to send my clients to multiple lenders to get multiple
That's good.
opinions.
That's good.
And I think you should always do that no matter if you're talking to an attorney, a realtor,
Yeah.
anyone. You should get multiple opinions, but especially when it comes to lenders. But I definitely recommend a divorce mortgage specialist.
We didn't talk about this. I'm bringing this up for the first time, and that is loan assumptions. I know you're not a lender, but you work in tandem with them. Um, I went to I go to a lot of seminars, but I went to this one family law seminar in particular some years ago, and this was before loan assumptions actually became part of the vernacular. I think loan assumptions came up in 2008, 2009, when we had that real estate crisis, if we all remember that, and I do, um, where something had to happen to make it feasible for people to get in and out of homes. And could you address what a loan assumption is briefly?
Yes. So a loan assumption would basically be the person taking over the existing loan. So keeping that interest rate and renaming who is on the mortgage. So that is a way to get your ex-spouse off of the mortgage and keep the low interest rate. However, loan assumptions are pretty rare. The lender has to allow them. And some lenders allow them in cases of divorce. What you really need to do to find out if your loan is assumable is to call the loan servicer and talk to them. And if they don't have an answer for you, or if they say no, then call back and talk to someone else and try to get the answer twice, because I've had clients who have called the servicer and they've said, no, it's not assumable. And then they've called back later and the person they talk to knows of an exception for divorce that they can assume the loan. It's
Interesting.
not very common, but it does happen. So if you are really trying to keep the home in divorce, then go through all your options with the loan assumption before anything else.
That was such a great point you just made, because this happens quite often when you have a company servicing something and you have a question, and it's a really important question. And the person you're talking to on the phone says one thing, and you bring that back to your spouse, and your spouse is like, wait a minute, let's call back and ask some more questions. You get a completely different person who gives you a completely different answer. And so I like what you said about, call back a couple times, verify, really verify what the person said, especially if, well, you never know who's going to answer the phone.
You never know. You never know. So yeah, try, multiple times, and if it works out, great. If it doesn't, then there's options that we can help you with.
Okay, and there's one other thing I want to bring out about this, and this is really super important. So, this is one of the family law seminars I went to from the Los Angeles County Bar Association many years ago, and it was a panel of judges that were talking to the audience, and I was one of the very, very few non-attorneys in the room, but I want to be educated, so I'll go to everything that makes sense for me. And they were saying to the attorneys, um, please don't obligate a third party for anything in these settlement agreements if the third party isn't aware of the obligation. And they brought up the loan assumption. They brought up real estate as an example, and they said, if you're going to say, if you're going to say in the settlement agreement that the lender has really no control over who is responsible for the mortgage because you're writing a passage in the settlement agreement that they don't. He said, that's not going to stand up for you. So, as an attorney, Hannah, where do you sit with this, obligating a third party that may not even know that they're
Right. Yeah, I would agree with that, of course. I there are I think a lot of things that can happen in a settlement agreement that can be put in that are really mistakes. And it really depends on the level of knowledge of your attorney, the experience, and whether or not they're tuned into other industries that cross over, like real estate. Um, we also see that there will be written into a settlement agreement that a buyout will happen. They agree to a buyout. But then there is a change in a financial situation for the
Hmm.
person that's supposed to be doing the buyout. And after
Hmm.
the settlement goes through, this can't happen. But there was no backup plan in the
Right.
settlement agreement. So then you're having to go back again to your attorneys and pay more legal fees to figure out what will happen. So it's good to make sure that you have a backup plan in the settlement agreement as well.
Phenomenal point. I couldn't agree with you more. Um, I'm dealing with a client in California, and I think they were really smart. They're relying on their realtor. They're putting the house up for sale now, this month, April. If it doesn't sell by July, they have their backup plan. You know, who's going to move where, who's going to take over the payments. We put all that in there. And then they gave a specified amount of time in which they will have the realtor monitor the market and get back with them and work in tandem with them to say, okay, now it seems like it's a better time. Let's list this again.
Yes, that's something you can absolutely do is, kind of test the market. And if it's not working, then take it off, do something that you agreed to, and then relist it. So that's what, I tell people is a delayed sale. You can agree to a delayed sale, but you just have to agree to who is taking care of what in the meantime before it goes on the market after that delay. But there are ways to do it where you can time the market in times where you think the market might be better. If you're,
Hmm.
especially like we talked about earlier, if your home is underwater and you might want to wait until that equity increases.
Yeah, yeah, unless you absolutely have to sell it. That's a
Yeah.
great point. Hannah, is there anything that you really wanted to make a point of that I didn't address in this discussion?
Um, I don't think so. My main advice for people going through divorce who own real estate is to talk to a realtor early, but not just to talk to a realtor, talk to a lender, a tax professional about the consequences around your home's decisions and divorce. Um, but anyone that you can talk to from different areas to help you through the process is really important. You should not just be relying on a divorce attorney, as amazing as they are. You should have multiple people on your team.
I know they have so much on their shoulders. They really do. There are so many different moving parts,
Mm-hmm.
especially if you have children. My gosh.
Mm-hmm.
Yes. Um, Hannah, you bring such value to the area of real estate and the family home in a divorce. I also love the fact, and we're going to give your website address out in a second, and it's in the show notes. I really like that you educate people and you have options for them to participate in different classes. So I really encourage people to look at your website because that's why I wanted to talk with you. I thought this is great. This woman really understands her audience. She understands the field of divorce. And you say all the things that are so important, and that communication plan blew me away, literally blew me away. So, Hannah, your website, please, and best way to get in touch with you.
Yes, my website is Hannah Oman SD as in San Diego.com. It'll be in the show notes. You can reach out to me on the website. My phone number, my email, and a way to book a free consultation is on that website, along with other free resources to help you figure out how to navigate your real estate assets in divorce.
Right. And just because Hannah's in San Diego does not mean she can't work with you in some respect if you're in another state. So, yes, our licenses with some of the things we do are state specific, but our knowledge is human. And so we all deal with things that happen to anybody in any state. And the value Hannah brings to the table is incredible. So thank you so very much for being our guest today.
Thank you for having me.
Ah, it was an absolute delight. And thank all of you for listening to this because, again, the family home is our greatest resource and asset many times, and it just has to be handled perfectly. So I really appreciate the time that you took to talk with us. Thank you so much. And thank all of you for listening, and have an amicable day. Talk to you next time.